Hi everyone. Today, let's talk about my options portfolio. First, I will go over my portfolio with Robinhood and some of the changes that they've done to how they track earnings and account value. Then I will go over my Tastyworks portfolio. Then I want to go over some of my rules and how I make decisions with my trades. If you like trading stocks and options and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Starting off with my Robinhood portfolio, you can see over the past month it's been pretty good. Had a little bit of a dip here, but since then we've been making new highs in my account value. And you can see here they changed how they are doing portfolio value. This is the amount of money I have at risk, and you can see they do a percentage of that. But I have buying power down here that I could use to invest in more things, but right now I don't have that money reinvested. So in my opinion, this gives you a little bit better percentage performance versus just this amount versus your overall buying power because you're not using all of it. And overall, it gives you a better picture of how much capital you're using and how much capital you have in reserve in case you need to get out of any positions that go against you. Or if a stock comes into a better position and you want to take a new position and maybe use more buying power, then you understand exactly how much you have left over. Looking at my positions here, I am maintaining an Apple position, which is down a little bit today. I still think Apple is a pretty good buy right in this 108 to 110 price range. I might have to roll this position out as it is getting within that 30 days to expiration. And as it gets closer and closer to 21 days, I might have to manage it. But for now, I'm just going to let it go. AMD continues to rally and make money. Disney has been rallying as well. This is a new stock that I plan to do a full review on. Palantir. This is a digital consolidation company. They take data that companies already have and they consolidate them into one place and allow them to make decisions based on that data. They are not a data collection company, which is a little bit of something that I will go over. I do have a Starbucks position here. I think this is part of the value rotation away from tech and back into some consumer products. And then I have Yeti here, another pretty cheap stock, but has been on a tear recently. And I continue to roll this position up and receive credit. Overall, Robinhood has been doing pretty well for me. And I continue to maintain this account just as an example of what can be done with a relatively small options portfolio. Moving on to my Tastyworks portfolio. First up, we have Beyond Meat. This is a put credit spread. It's 13 points wide, and I got $2 for that credit spread. There's a little bit more risk here than I would like to take, but Beyond Meat is down pretty well off of its highs, and I feel comfortable taking a little bit more risk here. The IV rank is pretty low right now, so if you don't have a position in Beyond Meat, it might not be a good time to get one. But I'm pretty bullish long term on this company. Then we have Facebook, again, was down pretty well off of its highs, and this is actually a naked put here. And I got a $4.70 credit. This is a pretty large position for me to sell this naked. It's a little over $4,000. So quite a bit of risk here, but I did roll this position up from $240 on the rally, and I took around a $2 profit on that. So my actual cost basis here is around $243 per share. I'm pretty comfortable buying the stock at that price, and I don't think we're going to really test the 250 even. I think we'll get a rally long before we get down to this strike price, so I'm pretty comfortable with this position. 3M, this isn't a winning position for me right now, and I do have an order here to close it at 50% of profit if I can. Still have a little bit of time on here at 31 days to expiration. 10 more days and I'll be looking to take this off, winner or loser, as this is an iron condor and I probably won't adjust it. And the reason it's losing a little bit for me is 3M is right at the upper end of my iron condor. You can see I'm losing on the call side, and I've made most of the money available on the put side. I don't really want to roll these puts up yet in case I get whipsawed to the downside, but I think this is part of the value rotation in terms of money moving from tech away from Facebook and over to companies like 3M. Looking at 3M specifically, it's been on this upward channel for quite a while here. Continues to hit this upper trend and then retest the lows. And it's been doing this all the way since May. So we had a rally, a dip, a rally, a dip, a rally, a dip, rally, and then a larger dip. So we are on the upper side of this range right here. And I'm pretty comfortable waiting for a little bit of a retest here on the lower side of this channel. And if that happens, as it starts to downtrend a little bit, I will be able to close that iron condor for a little bit more of a profit. So I'm going to sit on that just for a little bit longer to see what happens. Looking at another one of my base holdings here in Microsoft, it is in the money right now, just a little bit. You can see the price is just below my 210 strike. And I did roll this position out in time. I think I received somewhere around $3 in credit from my old position. I know it says more money here, but that's because the position went against me and then I rolled it out in time. So my actual credit there, I think, is about half what the value is. Again, another large position here at 4,800 for that naked option. But I'm pretty bullish long-term on Microsoft. And it was recently up around that $220 to $230 price range. And I think we're just seeing a little bit of a pullback here, and then we're going to push towards those highs. Overall, this is one of my more bullish positions. Moving on to Match Group. This was a strangle. As the stock moved towards my put position, I did close the call side, and the stock has since rallied up a little bit. This is another stock similar to 3M that has been chopping up and down. And I sold the strangle, closed the call side, and now we're rallying and we're making money on the put side, which is exactly what you want to see. It's a little bit of a risky strategy, but it's been working out specifically on these stocks that are choppy, like this one. Netflix, another similar move I did here, closing the call side for a profit and then waiting to see if this put side is going to rally back. Kind of a weird position here where the put spread is losing value equally, and that's because the stock price is coming down towards me, but I'm not gaining any money on that further out of the money put. So overall, it's putting me at a very small loss. Again, another company that I'm not really concerned about being long at $450 a share, but right here at $482 a share, think it might be a little bit overvalued or fairly valued. So we'll just wait and see how this turns out. Overall, the credit here was only $2.50. And I put up $1,500 for this trade. So a little bit over 10%, which is generally where I like to be. Looking at Peloton, this is a put credit spread, even though this is a cheaper stock. And that's because Tastyworks does not allow for taking a naked call without putting up the full value. So if I wanted to do a naked put option here, I would have to put up the full $9,500. And since that's not really capital efficient, I did buy the further out of the money put, and it didn't cost me too much money to do that. And Peloton has been a continuous winner for me. If you've been watching my videos on options, I've continuously taken profits on Peloton. Even in the dips, I held through most of those dips and continue to take profits as we sit around this $110, $111 price range. Looking at the Qs, this is an iron condor. Again, the Qs have been pretty choppy around this price at 290. I just think they're really overvalued at this point. So as they continue to rally, they get beaten right back down. And anytime we're making new highs on the Qs, it seems to reverse. And I'm not really worried right here in the 290 price range. This is a little bit of a loser right now just because the call side was tested a little bit. And another position where I'm losing value on the further out of the money call faster than I'm losing it in the closer to the money call. Overall, I'll sit on this for at least another week, and we'll see if we can get it into the profit. Looking at Snapchat, I did have to close the call side on a dip this morning because it did have a pretty aggressive rally, and then I rolled up these puts just to collect a little bit more credit up to the $40 price range. Snap has been on a tear and probably shouldn't have been selling calls on it, but we'll see if this rally holds up. Moving on to Simon Property Group, another stock that has been rallying really aggressively. I did have a naked option at $65 per share, and I rolled that up and further out in time to get a bigger credit. Simon Property is also receiving a lot of value from the value rotation away from tech and back into some of these recovery stocks. As people see the vaccine coming, Simon Property looks more and more valuable, and I think we're going to see a rally pretty close to their pre-COVID highs as long as they can continue to generate revenue. And then I have the standard SPY position. I actually sold the weekly SPY position here on one of the lows. That's in a little bit of a profit here. I think the lows might be in for the week, right in that $355 price range for the SPY. We'll see if that comes to fruition, but this is just a pretty small credit spread at 50 cents a share. And then I have my bigger position here at 35 points wide. And for that credit spread, I received $3. Again, right in that 10% range for that credit spread. And then lastly, we have Slack Technologies, which has been on a tear in the last 2 days. And currently my call position is in the money, but my put position hasn't received a lot of credit yet. And that's because this is over earnings. This was probably not a great trade, and I'll probably end up taking a little bit of a loss on it, but we'll see how it works out. I'm pretty bullish on Slack Technologies over the long term. And again, another stock where I probably shouldn't have been selling calls, but we'll see how it works out. Lastly, I want to go over some of my rules of thumb for how I take and manage trades. I generally look out to that 45 days until expiration to sell options, and I like to manage around 21 days or around 50% profit, whichever comes first. When buying options, I try to buy short-term options. This is because the gamma risk, or when buying options, the gamma benefit does tend to benefit the buyer. That means if you see some pretty wild swings in price, it could make that option gain a lot of value very quickly, even if the option itself doesn't land in the money ultimately. When it comes to selling puts and calls, I try to sell puts on down days and sell calls on up days. This seems to reduce my risk quite a bit. And when I tend to roll up puts or roll down calls against positions that are being tested, for example, if my call side is being tested in Slack Technologies, if I were to roll up that put position to try to receive a little bit more credit to the upside, I tend to get whipsawed and see the price go down through my put side. And I try to avoid that. So generally, I like to roll up my puts on down days and roll down my calls on up days just to reduce a little bit of my risk. Iron condor is another thing that I'm noticing on Slack Technologies. Iron condors across earnings don't seem to have the same theta decay as they do on options that don't cross over earnings. And that's why the put side on Slack Technologies is not giving me the credit it should be, especially when my call side continues to be tested. And then another general rule here for trade management, looking at the percent profit versus the number of days held. I like to see that 50 to 60% profit around that 14 to 21 days until expiration. But if you do see some pretty large profits between 10 and 40% here in that first week, generally you want to take those positions off, as you will see some kind of reversal. Could mean you're seeing a little bit of an unsustainable move, and you should be looking to take profits a little bit sooner, as that position could go against you after you've been in the profit. And right now, if you've been watching Lululemon, this is exactly what happened here. I was somewhere around this 30% profit in just a couple of days, and I took that position off and it immediately reversed to the downside. And I will be looking for a new Lulu position once I see a little bit of a bottoming formation. Helping to manage these winners at lower percentages instead of holding till expiration, trying to get that 100% profit will give you a better win percentage. And you can't lose money when you're taking winning trades. So it's just something to keep in the back of your mind when managing your trades. Let me know down in the comment section what you think of my positions. Are there any positions that you have that I don't and you think I should have? Make sure you throw those down there as well. Definitely offer up any trade ideas. Also, definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes, and have a great day.